things. And my mission and purpose has been to take financial chaos and put it into clarity and take control over the field. I guide entrepreneurs to stop fearing their money and actually make confident decisions and building systems that actually work. So Heartfelt CFO and Tax became a place about strategy, clarity, and it comes from the heart. And owners run their business because they want to do something, and that's exactly what our strategies do. And our work gives clients freedom, mastery over money, and peace and confidence around taxes. And our core philosophy is really financial clarity that creates freedom, strategy that creates stability, and understanding your money that changes everything. So it's making the decisions that work for you and not because somebody else has told you. You know, a few hours ago, I was in a group, and one of the common questions was, if having a tax advisor helps you around making good decisions. And what I always tell clients is that we teach you around money and tax and business, but at the end of the day, it really comes around you making the decision. So most business owners, they overpay on taxes and they scramble at tax time and they feel out of control. And even if they are working hard every day, they still feel like things are out of control. And I remember when I started, when I was just a bookkeeper, I used to feel like it was hard because there was always so many things to do. And I was met with all of the things that I didn't want to do, that I was like, there has to be a better way. But the common pattern and theme was around with business owners and even with myself was to understand this from a perspective and from a view that aligns with my culture and values. And what exactly does that mean? You may think that taxes has to be a certain way. You may think that money has to be a certain way, but it may not align with really where you want the business to go. And that's really what this is about. So what you're going to get today is understanding how small habits prevent big mistakes, learn simple systems that work quietly in the background, spot missed deductions and tax strategies that may save you thousands of dollars. Walk away with basically a mini financial clarity plan to complete live. In the comments, Shauna is going to put, if she didn't already, a worksheet for the presentation. You can do it. You'll have to make a copy. She put instructions that you can do together with listening to this or at your convenience as well. So, of course, mistakes cost us money, but they also teach us our patterns. Money has clues and patterns are our keys to our next steps. So many business owners struggle with this. They wait until tax time to plan, keep disorganized books, and don't implement repeatable systems. I was actually just working with a client right before this, and logging into her bank account was so stressful. You can see on her face how hard it was for her, but she did it. And what was happening is that she was so used to somebody else doing stuff for her. When it came for her to do it herself, it became a whole new leap. And the important part with this example was just it's a matter of is that we put this hierarchy around money, but money is just an energy and money is a reflection of what we're doing. And it's a matter of what we're going to do. And let's make friends with the tax law so that it can help you. So the impact of not doing these things is missed deductions, surprise bills, stress, and lost opportunities. So why does tax planning matter? Tax planning isn't just a year-end task, it's a mindset. It reduces stress and last-minute scrambles, maximizes deductions and credits, improves cash flow visibility, and turn taxes into a strategic tool for growth. Now, even if you looked at one benefit from this list, you would see how much it can do for you. Now, just alone reducing stress, or maybe it's just the last minute scrambles. For me, I used to do this when I would like a whole day, but I like it better when I just do 10, 15 minutes a day of my tasks, and that becomes more doable for me. So maximizing deductions and credits, these become all of the possibilities. So what are our key lessons that you might be missing? Number one, assumptions that inflate your tax bill. I can handle taxes at the year end. You can, but it just may not be the way you want it. I don't earn enough to benefit from planning. It could be that you don't earn enough, but it's earn enough in your mind. But regardless, when we earn money, we still have to do planning for our money. When we plan for our money, we protect our money. If we don't plan for our money won't protect us. My CPA catches everything. It's putting the burden and it's putting the responsibility on somebody else. As the CPA will catch things, it doesn't mean he's going to catch everything. Simply because we didn't spend the money, you spent the money. And what we're looking for in terms of the tasks that we're doing is basically how things are going to work. So the action is review your finances regularly and take control with proactive planning. The next one is missed deductions and major expenses. I'm sure you heard a lot of this, but it's really how it helps you today to take a different step and make a change. Home office, travel, meals, there's so many things. Equipment purchases, charitable donations. The real thing is tracking our expenses. You know, last week I was working with a client, and I remember when we started with them, they literally came with their mail and it was like stacked. And I'm smiling because now they're like the pro at doing paperless, everything online, and they can't imagine it any other way. And it's not making any other system bad or wrong. It's just seeing how much easier things can get with taking the steps that will make this whole thing easier and more manageable. So with doing this, you get to capture the deductions, and then you have an accurate return to reflect what's actually happening. Now, why is even an accurate tax return necessary? Sometimes people are like, it's good enough, Margot. Now, it could be, and that could work. But sometimes when different things happen, for instance, if you want to take out a mortgage, if you want to go out for a loan, if you did too much deductions or not enough deductions, you didn't take a salary, you didn't do your K1s. There's so many different things which would have a factor when we're looking for things across time and space, across our business journey, or really just our finances for our personal homes. So what are some strategies that you can implement? There's the accountable plan. We can reimburse employee expenses, which are basically tax-free. You can do the home office deduction. Yes, it's another thing that you have to track, but there's ways to do it. But these are things to keep in mind that you have at your fingertips. Employee awards, tangible gifts. The Augusta strategy, you can rent your home to the business tax-free. You can hire your children, which for me is one of my favorite. You know, when my son was in high school and I hired him, at first it wasn't to hire him. I ended up learning the strategy after I hired him. And what ended up happening was you start to pay into your kids' Social Security when you hire them. So they're building from an earlier stage on top of actually learning responsibility and all the benefits of being in a business. So how things actually evolve, it's really, really cool. The home gain exclusion is another one about residence sale. And depending on how this works out for you is how it would really amount in terms of dollars. But there's so much opportunity. So habits that make a difference: quick daily money check-ins, weekly expense review, monthly financial pulse. Why does it matter? It's spotting the deductions, optimizing cash, and implementing strategies year round. So what happens is that when we wait, it's like waiting for the rainy day, or it's like the rainy day tasks. What happens is that it becomes really hard to tackle. And when we start to break it down per week or per month, it becomes better. Now, I'll tell you myself, and I didn't have my team to do at the point of even helping my own, it becomes a lot harder for me, let alone somebody who was not in the field. Hence why having these types of spreadsheets and systems and support is going to make this more manageable for you. So here are some key systems to implement: cash flow channels, know exactly where the money is going; tracking engine, proper categorization and deductions captured; and review rhythm, just a monthly check-in, meaning maybe it's monthly, maybe it's weekly, maybe it's every day. I don't know. A lot of clients have different rhythms. It depends on the rhythm that works for you. Benefits in real life. With these strategies and systems, books are always reconciled. You can quickly answer financial questions. Monthly reports are highlighted growth opportunities, and unexpected issues are easier to handle. I want to give you a story around that. So I happen to be going for another mortgage right now. And what happened is that at the same time that that was happening, all these other issues came up. But because I had a system in real life, I was able to get through it faster so that I can get my mortgage. Now, certain tax paperwork happened to appear that was needed, and all of these different things happened. But the challenge of getting the mortgage didn't seem like a challenge anymore. It became an opportunity because I had the right resources and different things around me that created opportunity and possibility. So small changes create big impact. Even one habit can help reduce overpaid taxes, reveal hidden revenue, given confidence for bigger business decisions, and build longer stability and long term. Now, confidence with bigger business decisions, that goes into what I was telling you that when I was talking to this group today. And it's learning how to spend money. And learning how to spend money is trusting yourself that you're making the right decision. Spending money for tax purposes is not always the best answer. What we really want to do is spend money because it aligns with our company culture and values of where the business is going. To spend just to spend is not necessarily how we think of business. We can throw $3 at a Snapple, let's say, even though it may cost us really like $1.50. But we want to be aware around why we're spending the money, or you could think about it of like negotiables and non-negotiables in business. So in the worksheet, if you're open to opening it up, it will show the tweaks of the stability and reveal ways to keep more money. So step 1, fill out your current money habits and systems. You may not know this answer, but fill it out to the best degree that you can. Identify the gaps of where chaos or missed deductions happen, and decide one small habit and one system to start immediately. Now, you may not know the gaps. You may just have a bunch of things that you want to tackle. That's the same thing. If you don't know the habit that you want to start with, just choose any, or maybe the one, they may all be alarming, right? So what you really want to do is just choose one thing and start there and meet yourself where you're at. It's a big thing of where I tell clients is that it's important to meet yourself where you're at versus take on everything. So you're going to hear a lot of information today. And what I encourage you is that you may need to listen to this a few times before actually taking on everything or deciding anything. But the important thing is to take the action here. And of course, ask questions. So implement and grow. Your worksheet is a starting point, not a perfect system. We gave it as a baseline because at this point in the year, what happens is people get overwhelmed if they don't have, and this is what we want for you. Now, I've made a comprehensive training around tax prep if you're not in a bookkeeping process. So if that's something that you're interested in, we can talk about that as well. But I want you here to at least think about where you are with your money so that we can help you align with the steps. The more consistent you are with habits and systems, the more predictable and profitable your business becomes. With doing less is more. I'm sure you've heard that a lot, and it really, really is true. Money leaves clues, and following those clues and keys to your next steps is really just the best formula for business. Doing more of what works and less trying to stop of what doesn't work. So, oh, my slides are done already. Okay, so your worksheet is a starting point. Now, oh, what happened to this? So I want you to have that and make the consistent habits and have a profitable business. And remember, when we go back into these different changes, what we can do here is remember the 3 channels or levers, which is cash flow channel, the tracking engine, and reviewing the rhythm. These are the things of like that you want to keep as like a system, and then going back into your habits that make a difference. So what we talked about was giving you some strategies here that you can implement, and then these are just some things to think about. A lot of times people want to do maybe like a 529 or like an HSA, and it really depends upon where you are. But what I want to say is that meet yourself where you're at. I can't say it enough. And follow the patterns and the keys and the clues that are keeping you up at night or that you're not sure where to turn to, and trust yourself from there. And the habits that make a difference is the regular check-ins and just the financial pulse. If you find yourself in a red zone or like you're not grounded around this all, you really want to implement some of these strategies so that you can take it where you're at and continue. Now, what I'll say is like this, is that the tracking engine of proper categorization, it could deter you a little bit. Just start somewhere, and then we can take you further wherever you go. So the benefits will really support you no matter where you are. And what I can tell you, I'm a single mom, I'm divorced, and it really led me to do a lot of things by being able to have these things at my fingertips, and obviously having the support of my team as well, of really having the opportunity to make life possible. And I want that for all of you. And I think that concludes mine. And next, yeah, that concludes mine. And next is going to be from An, which is a little bit of a bonus as well.
Yes. So let me know when you have been able to see my screen. Okay. It can be likely, this is only based on my opinion, my experiences. Obviously, everyone are not same. Everyone is not same, but things happen. We're living in an economy which is very huge. So there could be some experiences I might have not seen. But in my opinion, most CPA will file your tax returns as the data is received. They won't go deep inside your transactions to assess if you may qualify a few credits, going for special depreciation identifications. I'm not talking about the regular credits like earned income credit. That is very simple and can be assessed very easily. Child tax credit can be assessed very easily. But when it comes to something special, for example, research and development credit, this is something relevant to your transactions, what you are doing in your daily business. If you're developing a product, CPA needs to dive in your transaction and identify or go with you and interview you specifically regarding if you had incurred any qualified research expenses. You may qualify for specific plans you are providing to your employees. For this, he needs to dive in your payroll and interview with you that need to review the documents of the benefits provided. Then he may be able to identify that if you are eligible for this sort of credit or not. I will discuss one or two later in later slides, but it happens. So one thing is you can go and check if you had missed any existing values transaction which may qualify for credits, some special depreciation. I will be discussing how you can do it in next slides. Other thing is future planning. Whenever you're going to invest a huge amount of money, for example, if you're planning to install a solar system at your home, you're going to invest money. If you're going to start a business, you're going to invest money. And when you're calculating your return on investment, most people usually miss the tax part. You can simply give estimated numbers and you can assess what tax you may owe. For example, if you register a wrong type of business structure and ending up having a high tax liability, your return on investment will be reduced. On the other hand, you can actually invest it smartly in a right type of business. You can restructure your existing business. If you're going to extend your business, you might, for example, if you're having an S corp. And if you're going to extend, you might your slab on personal tax return might change. So you may consider the business structuring. There are several more things. If you're going for retirement plans, you may check whether it will be beneficial for you or not. So when we talk about depreciation, most of the CPA are using bonus depreciation, Section 179. What is bonus depreciation? Bonus depreciation was 100% in 2023. Right now it's reducing 20% every year by the government. So in 2025, you will be able to claim 60% of the cost of asset as a depreciation in the current year. Section 179 is you can expense all amount of the asset in one go. But what happens when we talk about huge assets, like you got a rental building, there could be identifiable component which may qualify for Section 179 or bonus depreciation. There can be other great machineries that can also be applied with cost segregation method. You can apply the cost segregation method to identify the Section 179 components and claim the maximum expense in first year. It also depends if Section 179 will be beneficial according to your taxable situation. So you can always consult and discuss with your CPA that what is most suitable for you. Again, 80% of returns in my experience, I client that switched to me from other CPAs were utilizing cash methods. Right now, we are in the world that is changing rapidly. Business needs are changing rapidly. So if you are having expenses, prepaid expenses, you might not, this might not, cash method might not be suitable for you. If you are having accrual-based sales, but cash-based expenses, again, cash method might not be suitable for you. Accrual method might not be suitable for you. You need to check what is most suitable for you. The best thing is you can provide us the numbers. I can input and compare both of the methods, which is most suitable for you, and we can discuss. Every business has its own needs, its own pros and cons. So I don't recommend like just go for accrual, go for cash. Have your numbers, compare them, see the pros and cons, then decide which method you need to choose. Again, R&D credit, uh, if you're going to start SaaS-based business, online business where you are going to develop a specific product, usually they're earning losses in first 3 years. If you are developing any product, all of the expenses can be claimed research and development credits. These losses can be converted into savings. In the year of losses, you can claim the R&D credit, but they will be carried forward to the taxable years when you will be having taxable income. This credit can reduce your taxes. So ultimately, it will increase your return on investment. When there is a specific benefit available, small and medium enterprises, you can claim health insurance credits. If your sales are under 5 million and you're paying an average amount of $74,000 annually to employees, you can claim, also offering them the health insurance plans, you can claim the credit against it. So when you're hiring employees, you can offer the benefits, check which credits you can claim. So it will reduce your employment cost, your wages, expenses. So your employee expense is something that is major part of your business. You must consider while you're paying your employees. So that's from my side. If you're having any questions about the crux is only this, likely just discuss with the tax professional your CPA. You need to ask and just tell, like, you are going to a doctor, you are describing your disease. If you're not properly defining or hiding something from your doctor, this may result a wrong diagnosis. So more you will be telling about your business to your tax professional, more he will be able to help you. Yeah, this is all from my side.
So I think what we communicated today is that it's really important in the different ways. Thank you, An. I like how he compared it to like a disease. It's like when you go to the doctor and you need to explain the scenario. Unfortunately, people and business owners, which we are people, right? They take down the responsibility or the need around explaining what's going on. If you think you need help, you need help. If you want the help because it would make you feel better, that's what the field is there for. I could tell you, even myself, if I didn't have my team, there's so many things that I would not be able to do. And I say that to say, when you can dip into your own system as a business owner and it works for you, it's a whirlwind of a difference. And the clients that we help, what I see is that it's taken from fear to freedom, from fear to power. And it's really about what you want for yourself. And the goal of today's webinar was to show you the opportunity of possibilities and ownership. So I'm actually going to close this with a story. So this client that I was working with, she was like, oh, I didn't know I needed to pay for some software costs. Valid concern. And she was coming from a firm where they held her company and she really didn't have access to it. So it kind of made her feel safe that she didn't have to deal with it, log in, and any of the things because she's like, okay, I'm paying someone to take care of it. That's it. When she came over to us, we put it to QuickBooks Online, where now she had to upgrade the file from the desktop. She had to open it up. We had to connect the bank and all of these things. It kind of forced her to do more to step into her own world. And she's like, what's happening here? And at the end, when she was saying how scared she was, I was like, hey, ex-client, you did it. But I explained to her is that you own the company. So me undertaking the tech, and I'm not making it wrong for the other way. This is an example. Sometimes the desktop version is the way. And the point of this is that it put her into the power of around her business. And she was almost afraid of it her own self. But it was giving it to her the opportunity to own it. There's like this indirect thing that happens in the field that CPAs have to do it all and harness it all and all of these things of where sometimes these things just created itself. And we put her into the power of owning it. And I'm like, I work for you technically, right? I'm like, you can fire me at any point technically. Like, even though you're happy to have me and you don't want this, but really you need to own it because it's your business. So it's understanding responsibilities. So I hope you enjoyed today's very much. And whether you came today or you're on the replay, I know we had a lot of people who said they were going to listen to the replay. I really hope you enjoy what I shared, what An shared. And if you need to listen to it a few times, I really encourage. And if there's any questions, we are going to put the worksheet with the replay. Also accessing my calendar to get on to speak to any of us is definitely a possibility. You know, we're here to help you. There's a lot of resources. And the whole goal of Heartfelt CFO is really to make this accessible and to make you less afraid of this field and realize that, I'll be honest with you, I love tax, not just because I do it, because it really just created so much possibility for me. And I say this to say, he helps me so much. Like, really, I learn from him all the time. And I cannot be more grateful to have him as part of the team. And honestly, I commend him for anything on what he does for the tax clients and even for myself. I may know the tax code, but the way he implements it, it's a whole nother design level. And the goal of why the whole point of how we work together is just making the client understand. And I'm harping on this because clients shift this off, and this is a partnership. This is us working together, and we want to make that accessible. So that concludes from us. As always, any questions, let us know. Thank you for coming. And we look forward to talking to you more. Keep the questions coming because that's what created the possibility of today of putting together the presentation and anything else to come. Thank you.